Good morning, ladies and gentlemen. How's everybody doing today? Hopefully pretty well. Hopefully doing well. Good morning. So, a couple things to talk about. Not a whole lot this morning, but some interesting stuff to say the least. So there's a couple things: NERV, the S&P, and CZRs. So actually, no large cap today for me. There's some things that I'm watching, but I figured I would kind of mix it up a little bit this morning, or kind of throw out NERV and CZRs just because they're interesting to actually talk about, and I think it could create an interesting day on either of those stocks. And the reason being, oh hey, from Frankfurt, nice, in Ohio. All right, what's going on, guys? Good morning. So CZRs, CZR, and NERV, which is NERV, they're both easy to borrow stocks on TD Ameritrade. And so I know some of you guys are like, oh, well, what's that really matter? Well, when you take a low price stock like CZRs or NERV, and it's easy to borrow, what ends up happening is it creates an interesting day because you have the most used platform, which is TD Ameritrade, which means the most traders are on it, right? And then you mix that with like a low-priced, relatively a penny stock for the most part, almost, right? Now you have a really cheap stock that everybody can short because it's affordable. And now it brings in a bunch of people to short the stock that don't even really know what shorting is a lot of the time. So it creates a different mix because you have a lot of people that probably don't even short in the first place starting to short on a low price stock. If they don't understand it, they don't understand short squeezes. It can create short squeezes, or it creates a great opportunity to short a stock today. So let's get into looking at it, right? So let's talk about, first we'll talk about CZRs, which is CZR. Okay. Good morning from Morocco and Rothbury. Going to Rothbury? No, not going to Rothbury, but I know what you're talking about, baby. Jamaica, nice. Morocco, short, laugh out. All right, short squeeze. Yep, exactly. So here's the first one we're talking about, which is CZRs. So you can already see there's a big gap here today. So this is like CZRs Resort Casino. So I think there's news. So there's news that Eldorado Resorts is going to buy out Caesars. Right, so maybe there's rumors that Eldorado Resorts is to buy Caesars, and that's going to create create one of the largest U.S. gaming companies if they're all combined. Again, So again, that's some pretty interesting news. So that's why we're seeing it gap up this morning. But it isn't easy to borrow stock. So if we have a bunch of, and again, the float on this is probably pretty big. I didn't check it, but I know it's not going to be too small. But you mix in a lot of people shorting this stock today, and it could very easily have a good green day because that is legitimate. If that's a legit rumor, then yeah, you could see Eldorado Resorts possibly come in and offer to buy out Caesars for $16, $20, $20 a share, and everybody who buys in now, if they do end up getting bought out for a higher price than it's at now, they're going to make out pretty big, and it's a good win. So if you have a bunch of people shorting this today, I mean, people can keep buying up, and cause a short squeeze. So I think this is worth watching long bias today until the long trade fails, and then you could watch it short bias. But I think it's probably a good idea to be watching this long bias today. The daily chart, I mean, we're up pretty big. We're up to 1137. So let's see, 1137. There's no truly clear resistance there, but let's see if we can get on a yearly chart. 1130. Yeah, I mean, there's a top action around 12. So maybe push up to 12. That's probably where it stopped pre-market anyways. Yeah, about 12. You could see it gapped right to 12 and then came down. So if anything, I think $12 would be the mark that I would try and hit. We'll see. All right. No, no, not necessarily. No, not all the short squeezes are from easy to borrow stocks. There's plenty of short squeezes that happen on hard to borrow stocks as well. Six, yeah. See, Leonardo, yeah. If there's 600 million shares on CZR, it's not gonna move dramatically fast. All right, so now we have the next one, which is NERV, NERV. So this is a company. It didn't actually. There is no news on it for Thinkorswim, but there is news like elsewhere on MarketWatch and stuff. But basically, the news came out and said that their insomnia drug, there was some positive outcomes or tests that had come of their insomnia drug they were making. So it gapped up. So there's really no news on it within TD Ameritrade's platform. So from the trading side, right, for a lot of traders that woke up this morning and they're all kind of looking, they see, oh, look at the stock, it's up. They're not seeing anything that should cause the stock to be up, at least on their trading platform from Thinkorswim. Maybe there is something on E-Trade or IB, depending on what platform you're with. But if it's not on TD Ameritrade, chances are it's not on many other brokers' platforms this morning either, which would then cause the trader like myself to go elsewhere like the internet, Google or something, and type in the stock and figure out where it's coming from. And there's a little bit of news out there on MarketWatch this morning that the stock, something regarding its insomnia drug and some patients worked well. So it's up. But it's also easy to borrow. So now you take a lot of traders that are looking at the stock and go, you know what, I think I might short this because most penny stocks fail, right? So maybe I'll just short this one. And this is allowing a lot of traders to get in short because it's an easy to borrow stock. So I'm kind of hesitant to actually wanting to short sell this stock because I know that more people can get involved shorting it today because it's easy to borrow and it's on TD Ameritrade. So if a lot of new traders start to short this, we could very easily see a short squeeze. So watching it both short and long today. Matrix 4 or 5. Yeah. So it's interesting. It's worth watching. Going to keep an eye on it. Yeah. Yeah, exactly. Yep, you're right, Brad. If you have like equity feeds, you'll get it. Yeah. I myself hardly. I don't even pay for news scanners because generally speaking, if something's up, there's news around it somewhere. You know. Kern. Let's see. Yeah, Kern is that like it wasn't even really an IPO. It got kind of forced through, but I mean this is on kind of a downward pullback. This is not what you want. This was a bubble. This is like basically like a one-day bubble, and it basically shot up and crashed. So probably wouldn't be too concerned with trading Kern myself. Thoughts on Disney with Toy Story 4? If anything, Toy Story 4 has already been priced into Disney a long time ago. If you're a big-time institutional fundamental trader, you've been pricing in the outcome of Toy Story and the revenue that Toy Story would bring in many months back. So, yeah. So, like, if you're thinking about buying it because of Toy Story 4, just know it's probably already been priced into the stock many, many months ago, if not even like a year ago, probably. So, again, probably I wouldn't worry about that. What is a bubble? A bubble in terms of like stocks or the economy. Bubble is when prices get overdone, right? Overdone to the upside. Bubble is when the price grows so big that you can't really the price of the stock is not justified by the actual fundamentals of the company or the price of the stock market, right? Or the cost of living in an economy, right? The cost of living is so high and everybody has all this money, but in reality, the economy is in a bubble where things are they're kind of too good to be true. Really, everybody doesn't have that much money. It's because the stock market's overbought. It's way too high, and it doesn't justify the actual fundamental value of most of the companies within the economy. And then it goes like this, goes down really fast and pops. So that's basically what that is in layman's terms. IGC, I would leave IGC alone. PTN, I would probably leave PTN alone as well. I haven't looked at it a little bit, but I wasn't the greatest fan of PTN. So MU or AMD for me is on a more of like a bounce day, but it's not gonna. I don't anticipate it being a strong bounce. I think there's gonna be a little bit of a green move on it, but nothing major. So I'd be more long bias. For me, I'm neutral to long bias on AMD right now. Not really crazy about it, though. With MU having earnings coming out, do they have earnings coming? It's tomorrow. Yeah, there might be a little bit of a. I mean, yeah, there might be some relationship there where MU moves a bit, then AMD does a little bit too. But that wouldn't make me trade it any more or any less. But yeah, if MU goes up, then chances are AMD will see a little bit of a slight move that follows. Tesla for me is neutral too. Really nothing there for me at this moment in time. Right? Just kind of did its U-shape, pulled back, bouncing a bit. So for me, Tesla, I think, is a neutral play. Needs a couple days. Right now, it's just off a little bit of a bounce. In the next day or two, we'll see a little bit of a pullback, unless the market goes skyrocketing higher. But for right now, Tesla pretty much neutral. Let's see. So Alan, actually, the way that I would probably do that question, what you're asking, what are your thoughts on shorting a stock from the dividend date? I've actually come to find, and it's funny you say that because I've found many times too that even after a dividend payout, yes, the stock will decrease because of the amount of money that they paid out in the dividend, so it makes sense that the stock decreases, but then shortly thereafter, they actually get bought back up. But in your scenario, you're saying that after the dividend, you'll find that a lot of those stocks actually continue to downtrend off the dividend payout date. Again, it depends on which ones you're looking at it. But the way I would probably go about doing that is I would probably want to be long the stock to get the dividend payout, and then I'd want to be short the stock with options to hedge the long. So that way you actually get paid out the dividend, and then you can take the shares off, and then you could either let the puts ride and make money that way, or just hedge it so that you don't lose money on the value of the share price as well. So that's something to consider. So what are my thoughts on the overall market with all the meetings this week? Again, it's really been the same. It's always going to be the same. It's not going to always be the same, but for me right now, again, it's gold. I literally just told my neighbor down the street. I said buy gold. Not that one, but I mean, yeah, I told him again. I don't really want to say I didn't tell him buy it right now, but gold. I think gold's something that I think you should be buying right now. Not like now or tomorrow or 2 weeks from now, 3 weeks from now. I think gold is. I think gold's what you should be buying. There's nothing that says you shouldn't. And from a technical side, I'm going to go to the weekly chart here. From a technical side, this is in great formation for a breakout and a bull run. I mean, it's been in the bouncing accumulation phase for one. Okay, really, it's been there for 1, 2, 3, 4, 5, almost 6 years, just waiting, right? So, been a lot of buying coming in that. So I think it's ready to go. I mean, look at this nice, beautiful curl. We're breaking over the 1,300 price. I mean, market's at highs. It's all kind of adding up to me. So I think gold is going to be probably on a bull run pretty soon. Mike, no, we'll be. You can if you need, you can just chat right on Zoom. You can always ask questions through Zoom. Yeah, guys. So there's one thing I've learned. Is that yeah, like a predicting a recession. I mean, it's really hard to do, right? It doesn't take a genius to know that we're gonna have a downward move. How bad? Up for debate, right? How bad? Arguable. Will it happen next month? Arguable. But will it happen? Unarguable. Yes, it's going to happen, right? So we all know it's going to happen. How and when is always the $1,000,000 question, right? But you don't really have to know when exactly, and you don't have to even know exactly how to protect yourself and to make money. You just have to be willing to understand that that's probably going to happen, and that you should probably position yourself in a way that you can either make some money, keep yourself from losing as much money, but sitting and doing nothing is how you really get hurt, right? Kind of procrastinating this idea. So even if there was another 2 years to the upside, right? Even if there was in the market, does that mean that you shouldn't position yourself for the downside? Even if we do go up for 2 years, right? I would rather be thinking we're going down for the next 2 years. That way I'm ready so that when we do come down, you're protecting yourself on the downside. Because I would much rather miss 2 years of going up, right, than getting crushed as it comes down, right? We went on a bull run for almost 11 years now, right? So what's missing 2 years out of 11 or 2 years out of 10? In the long term, it's, So again, there's a couple ways to look at it. You'll have to be able to make the decisions for yourself on that. How to put the ETB, it's automatically programmed. The ETB, HTB on the top of the screen, it's automatically programmed into the software. You just need to, if your stock is ETB, it'll say it. If it's not, it will say that it's no shares to borrow, and then sometimes it'll be blank. Sometimes it'll say HTB, but you need to make sure that your screen is widened enough, or like, for example, watch what happens where it says ETB. If I shrink this in enough, it'll disappear. It should. Or maybe it won't. I don't know. Oh, never mind. I need to have 2 screens up here. So let me do this. Okay. See, gone now. And then there's one over here. But if I take this screen, I go this way, it's gone over there, but now back over here. So again, you need to, you might have too many charts causing your screen to get like scrunched together. Stefan. My thoughts on TWLO, Twillo. Give me a second. Crazy uptrend. This is insane. I think I went over Twillo not long. I felt like I was neutral. It might have been neutral. I can't remember. Nope, doesn't work there. Well, it's uptrending, right? I mean, it's definitely on an uptrend. So again, on something like this, you just buy. You have to buy in the dip. That's just pretty much it. To trade this the way you'd want, ideally, it's a stock trending up. So you want to try and buy essentially on the dip, towards one of these low points. Basically all you can do. Yeah, just buy the dip as it's trending up. It all varies. How much do you usually risk per trade? All varies. There's no like generic or go-to. All depends. Sometimes it'll be 100, 200, 300, could be a couple $100, $400, $500. Just all really depends on the sizing, the position. People say, you'll hear, oh, only risk 1% or 2% per trade. I mean, I guess if that works for you, go for it. Many people don't do that. Yeah, I don't know. So for me, risk is all about understanding where you're going to be wrong, right? So that's just it, right? So you look at, if I were to take this position, at what point do I know that the position is no longer valid, or my thesis or my game plan is no longer valid or doesn't make any sense anymore? At what point would that happen? Okay, that's where my risk would be, or I'd have to stop out. Based on where the price is at now, how much money would that be? Boom. That's how much it's going to cost me if I lose. And then I go, can I justify taking that trade based on what I think the outcome could be? If yes, then you get in. If no, then you don't, which doesn't take me very long. I just kind of see a move that I understand. I'll hop in, and I understand where it's probably going to fail, and that's my loss. And for me, most of the time, it's as soon as a trade goes against me and I don't like it, I'm just take it off. MLNT, about to take off. It could. I'm not going to say for sure. Yeah, it could. MLNT could have a short squeeze. That's what you're banking on today. It could have a short squeeze. So it's worth watching. Yeah, I would agree it's worth watching. Options are a different beast. You have to understand what you're doing. If you're so realistically, I mean, I can't say what's going to be better. It doesn't work that way. It's whatever you're going to like the best, whatever works well for you. I like trading equities more than I like trading options personally, just because of the way that options move. Then again, it's probably because I'm just very used to trading equities. It's more of what you're getting, right? So with options, it costs less money. You can use less money, and you can leverage more with less and make more with less. So for someone who doesn't have a lot of money, options sound great. Options seem better, right? But yeah, I mean, that's just it. Yeah, so the question, like, when do you think it's better to trade options? I don't really think it's necessarily better to trade options. I think if you're better at trading options, then you should trade options. Or if maybe you don't have a ton of money to trade with, but you want to get involved with the large cap stock, then it's probably better for you to trade options. But then again, if you don't have a lot of money and you're trying to trade options, you probably really don't even know all that much about options in the first place to be trading them. Not that you can't trade them, but to be extraordinarily successful doing it, probably not going to happen. So you'll probably end up losing some money. Whereas the delta, or the price, the change in price movement on a stock is 1-to-1, right? Where the change in delta or price on an option is not 1-to-1. It can be 30, 40, 60, 70. So it could move against you faster than it would if you were just trading shares. So there's a lot of what ifs and ors, so it really just depends. It really does depend. I would say it's better to trade equities until you can fully until you get very good at being able to understand direction and be ahead of the trend or ahead of the move on a stock and understand it before trying to trade options. Because when it comes to trading options, I mean, if you can pick which direction a stock's going, no problem, then you'll make money every time trading options, as you will with stocks. If you know which way it's going, you'll make money. If you don't, you'll lose, right? So if you can get better at picking which way it's moving more often than not, then all you have to do is just directionally trade an option. So anyways, guys, I got to get back to our private group now. So thank you guys again for tuning in. So as always, take care, have a green day, and I'll see you guys tomorrow morning for another stream. Everybody take care and have a good day.